back to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show, episode 115. Today is January 12th, and with me, as always, the head guru, head honcho, top dog, AJ Brown. Good morning, AJ. How are you doing today?
I'm doing well, Sip. Thanks for asking.
Before we started the show, you said that you were in a frenzy because there's a lot going on in the market, and that's great for us on the investing side. We're sitting on the sidelines for a lot of December, but where do we want to begin? I feel like inflation is a big storyline that's leading the charge this week. What are your thoughts?
Yeah, there's a lot of talk about inflation. Let me bring up the consumer price index, or I'll just bring up our overall calendar of economic news. So it was kind of a quiet week. And so a lot of folks were talking about, trying to guess what the Fed is going to do next. And so as you can see here, there was a couple of different Fed presidents that spoke, and they were hawkish, which means, they were basically saying, hey, we're not going to lower interest rates unless it's necessary. In fact, we might be ready to raise interest rates if necessary. So they kept reiterating this over and over again. And then sure enough, the consumer price index numbers, which kind of gives a inflation picture for retail, retail consumer, inflation, I guess you can call it. And it came in hot, right? They were expecting 0.2%. It came in 0.3%. This is for December. And, if you calculate that out looking in the forward, you multiply that by 12 months, that's 3.6%. And the Fed is very much focused on this 2% number. When you factor out food and energy, it's still the same, right? 0.3%. So that's higher than people were expecting, and it's higher than the Fed wants. And so that means that, if the Fed is focused on this 0.2% or this 2% target, they may want to keep interest rates where they are or even raise them. So that gave a little bit of uncertainty in the markets. And then when you take a look at today we got producers price index. So this is looking inside the wholesale inflation versus retail inflation. This had a whole different picture. This showed basically that things were either in December declining or holding flat, right? Very little inflation. So yesterday was positive news, but interpreted negatively because we know what the Fed might do. But then today's news is kind of negative news interpreted positively. It's quite confusing because it's kind of a guessing game at what the Fed is going to do next. And if you take a look, at the markets, we did get a bottom reversal that was confirmed just a couple days ago. And we're just skirting that line of 4,800. I mean, I got a lot to say technically, but in summary, it's just really uncertain, man.
Yeah, and I think we've mentioned that 4,800 level a few times now, with the psychology behind, if we're gonna break through it, we need a good catalyst to make that run to that second level.
Not only a good catalyst, but it might be useful to have seen a little bit of selling first, so that when the buying occurs, it's like momentum. It like really is coming like a charging bull. What we see here is not enough selling, and so it's almost like if this was a brick wall that you're trying to break through, which psychologically it is, you don't have much of a head start in order to hit it full on, right? It would be better to come from down here and really hit it with, a good head start to have a better chance of breaking through.
And I mean, on last week's show, we did go through some of the levels of where we would want it to jump down. I'm looking at our notes here. Oil sitting at 74. Does that have any impact on what we've been looking at? Your thoughts?
No, the only thing that we can take from that is that these skirmishes, that there's a lot of headlines about possibly escalating in the Middle East, whether it be the U.S. getting involved with these Houthi rebels to make sure that shipping lanes stay clear, or whether Israel spreads its focus from Hamas to Hezbollah in Lebanon. All of those headlines aren't really affecting the price of oil, mainly because the United States is producing. They've become the number one producer of oil. They're no longer held hostage to, for instance, OPEC or other oil sellers out there. So although it is a world economy, and you have to remember that. So even though the U.S. is pumping, record amounts of oil and the biggest producer in the world, it doesn't mean that the U.S. as a individual nation is protected from higher oil prices, simply because our oil goes for sale at the given price around the world. It's a world market. But it's something that at least gives some folks, if we needed to become an isolationist nation, we can take care of our own energy demands.
Well, that's good to know. I feel a little bit more reassured with that. Okay, so then let's go ahead and put ourselves in the shoes of an investor, right? Like, I'm coming back off of holiday break. I'm finally back in front of my portfolio. I've got the whole year ahead of me. I've got some money to put to work. And we've talked about this a few times, where it's not a good time to be a buy and hold long-term investor. And so what advice and how would you position this individual to take advantage? And is the premium selling concept that you teach in your course and that we talk about every week, is that a solid plan to take advantage of the setup and the market that we're looking at?
I mean, premium selling is valid in any market. And let me tell you why. Premium selling is selling option or the derivatives premium. And when you sell that derivatives premium, options change their price because of multiple different variables. Beginners think of options as stock substitutes. Basically, if you predict a stock move up or down, you can use an option to leverage that movement. Great. But other variables, other influences affect the option price. And one of the biggest ones is that options have an expiration date. And because of that expiration date, there's a pretty predictable, what we call time decay or theta decay curve. In other words, options will lose their value as they get closer to the expiration date. They'll lose their premium or extrinsic value as they get close to the expiration date. And that happens whether you're in an up market, a down market, a fearful market, a confident market. It's a guarantee that when an option expires, it will have no more time value. So we can be premium sellers, sell that time value, and reliably, no matter what the heck is happening in the markets, make money on that theta decay. So any market is good for premium selling. That is predominantly what I do. And you just have to tune your premium selling strategies to what the heck is happening out there. And what we're seeing as of today, and it really is changing on almost a daily basis. But what we're seeing right now is a lot of confusion and uncertainty. So the predictability, like you said, buy and hold, forget it. But there's a lot of other strategies that just aren't working in the long term right now because there's just confusion about what's going to happen. I hope that it materializes, Sip, in the next couple of days or maybe a week or two, and plan a little bit longer. But right now it is almost day to day.
And that's not mainly, but possibly because we're at these all-time levels, right? Whenever you get to these levels, you don't know what's next, right? And
Yeah.
we've been kind of negative on the economy because there are some statistics, but the stock market is telling us that everything is going very smoothly, very copacetic. The way that I always like to look at our premium selling concepts are buy and hold, or I've bought and held something that I like, that I know is going to pull back a little bit. Why not sell a little premium, collect a little bit of income, and then when we get back to those levels, it's almost like a dividend payment. And so with that, let's go ahead and give everyone an opportunity to learn more about premium selling. You've got a wonderful daily workshop where you break down these strategies in a way that makes it feel like it's a monthly paycheck. And that's why I'm a big fan of the premium selling. Is you got some names that you like for the long term, you hold them, you sell some premium. There's a variety of ways to do it, and AJ does a wonderful job in this daily workshop. So head on over there. The link to that is in the chat. And then secondarily, we've got that free indicator. So if I pull up your chart, it looks like we did just get a buy signal. And so that's been pretty consistent the last 4 months or so that we've been using it. So if this is something that you, the viewers, are interested in getting, head on over to that link that's in the chat, that's in the banner down there, and you can go ahead and download that. Otherwise, we are streaming live. So if you, the viewers, have any questions, any tickers, any positions that you want AJ to give his input on, go ahead and throw it in the chat. Otherwise, we're going to take a break. AJ will have his pick of the week later. We'll do our speed round, and we might talk a little bit crypto. So sit tight, and we'll be back in a few seconds.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right, back at it again. One of the other headlines that I saw a lot in the news today, AJ, was this Bitcoin ETF. Have you heard the commentary behind that the last couple of weeks?
Yeah, the SEC has finally agreed that there can be, remember, it was, for years debated as to whether we should have some sort of exchange traded fund that is accessible, so accessible. I mean, if you wanted to trade any of the cryptocurrencies, you really had to get a special wallet, and you had to, it took some effort to be able to trade and accumulate some of these different currencies. But, making it into an exchange traded fund and putting it out there on the common market makes it all of a sudden very accessible to everybody. And just this week, the SEC gave it its heads up. And it's funny, I listened to the press conference, and the SEC said, yes, we're going to go ahead and allow this to be traded. And then at the same time, they said, now we're allowing it to be traded, but we're not endorsing They made a point, and they've never done that with any exchange traded fund to date, but they made a point that they're not endorsing the trading of it, they're just allowing the trading of it.
And then also, what's his name? Gary Genslinger, right? Whoever the chairman is, his Twitter got hacked. So they hacked his Twitter account and said that and it was something like, "Oh, we're gonna be approving the Bitcoin ETF," and then like 30 minutes later, he comes on and is like, "I didn't say that. I was hacked." And so it's like, oh, what's really going on here, guys? But I have a funny tweet that I saw that kind of maybe gives, it is maybe a little fun to it. But I don't know if you're familiar with Josh Brown, but he's a commentator on CNBC, and he's got a great podcast. But this was what he posted today: Bitcoin ETF goes live January, 2x Bitcoin ETF, 3x reverse Bitcoin, May ESG Bitcoin, June 2 times reverse Bitcoin, July smart Bitcoin, August emerging Bitcoin, September private credit Bitcoin. And so the humor here being like, once you open the gate to the Bitcoin ETFs, they're gonna, these institutions are really gonna start to develop these. And what are your thoughts on that? Like, could this go negatively for us?
Nah. There are trading. It's interesting. There are trading vehicles, investment vehicles, like on the CBOT. There have been investment vehicles like you could basically, for farming, you can invest in whether you think it's going to rain or not, right? So this whole concept of what is a cryptocurrency and should we be able to invest and have this asset go up or down when maybe we're questioning, that's not new. I mean, we've been investing in these things for like 30 years. That's like, will farmers see rain? That's the whole concept behind derivatives. I mean, it's all a mathematical exercise, and this is just a new mathematical exercise, in my humble opinion. And so, I don't think it's going to go against us. Now, whether it sees a lot of interest or not, or whether it stays focused on a target set of investors is another story. But the supply of ETF providers, meaning the different banks that decide to create these, like Josh said in his tweet, I mean, I don't think any sort of limit to that, because indeed, once the SEC opened the box to it, these guys are going to jump on board in order to try to get and expand the market for those.
And in theory, I feel like Bitcoin's just naturally going to go up because of how it's constructed, right? It's not like this concept of we can just make more of it. There is an infinite amount, right? And that's kind of why people support the theory, or they've supported it for a long time. And so I'm interested just to see the longevity of it. But in terms of its use, sending money here and there, it's definitely proven that it's more of legal loopholes that it seems like we're still figuring out, with the SEC basically saying, we'll allow it and this and that, and a few of the other cryptos out there that may be like trying to line up to be equal players. But I don't know if I see Bitcoin getting to 100,000, 200,000, right? I think right now we're sitting at like, I don't know, 30, 40, 44, maybe something like that.
44. So that's interesting because, the Fed is pulling money out of the markets, right? And so you would think that this interest in Bitcoin would wane, right, as people readjust their portfolios. But people are looking at Bitcoin the same way people have been looking at gold, as kind of a place to store money if there is fear and uncertainty about the market. And so it's not just a place where people are being speculative. It's actually being considered almost like a defensive play, it looks like, because when the Fed first announced that they were going to do quantitative tightening, raise interest rates. Bitcoin dropped to like $24,000 a Bitcoin, and it's back up to 44. It's been slowly and secretly behind the scenes being bid back up. So I think that, these cryptocurrencies are here to stay, especially the blockchain technology that they're built on. So, as investors, as sometimes you have to split your brain a little bit. As, folks who are looking for the utility out of it, you may, not see that. But as investors, we should be open to, what's in there. And I'm personally looking forward to seeing if these ETFs are optionable, because heck, man, I'm going to sell premium up against them, or find ways to use different option strategies to take advantage of the price moves, right? If there's enough interest in them as premium sellers, it doesn't really, and I hate to say this because I know a lot of folks, it doesn't matter so much the underlying asset, whether it's a Bitcoin ETF or whether it's a stock that nobody's heard before. It doesn't really matter. It matters the patterns of the investors who trade it, right? So if we've got investors trading these things as option traders, we can capitalize on that. And that's kind of what I'm interested in this one brain of mine, in this one compartment of mine.
Yeah, and it's if there's enough of us investors who are confident in whatever is the underlying asset that we would purchase ourselves and sell and purchase and create a market. But that was going to be one of my questions of, will there be an options market? And I guess we don't know that until the ETF rolls out and there's demand there, and then they would determine whether they can create a product from that demand. Is that kind of how it would work?
Yeah, when the ETF is created, those banks decide whether or not it should be optionable. I mean, everything is optionable. The question is it going to be available on the standard market as standardized contracts? And it just requires them to fill out some paperwork while they're creating that exchange traded fund. So as each ETF is released, we'll just look to see if they decided that they wanted it to be optionable. And I would guess that the majority of them will be, because nowadays everything has options on it.
Without a doubt. And that's what we follow here on the show. So with that,
yeah, I'm excited. I'm totally excited to include that on our watch list if it comes around. So we'll keep our eye on those things.
Definitely. So with that, I think the fans and the audience are eagerly waiting to see what you're looking at this week and what is appetizing in the world of options investing, options trading, premium selling. And so with that, AJ, your pick of the week this week is fast food chain Wendy's, ticker symbol WEN, a name that we covered a lot in the past, but not too much recently.
No, Wendy's went through a period where, so let's back up about a year and a half ago. I was featuring Wendy's almost weekly. And that's because here, I'll go back to a 2-year chart here. You can see that Wendy's was in this pattern. First of all, we like boring stocks that are not always in the news, right? And so fast food restaurant, Wendy's, Mickey D's, Burger King, those are just staples. They're mature stocks, and they really don't get a lot of headlines, right? And so we like that for selling premium in the long term. And Wendy's really did produce for us. I'm showing you a chart of Wendy's, and we like stocks that kind of get stuck going sideways, right? If they get stuck going sideways, but we know that they're a good company. They have positive earnings every time there's an earnings. They give out dividends to their investors. They're a solid company. They just don't have the pizzazz to make their stock price go up, but they make profits. They give their profits to investors in different ways than asset appreciation. these are the perfect targets for long-term premium selling. And I love long-term premium selling. And so we were trading that for a while. And then all of a sudden, Wendy's took a couple of months there where it fell out of our channel, our automatic strategies that work with our premium selling. So when we set up premium selling trades, we always put protection in place, and we basically create a trade zone where if the underlying symbol goes out of the trade zone, a lot of times our positions either automatically or semi-automatically, require a move here or there, adjust and take advantage of that. So that happened and the trade ended for us. But now I'm kind of seeing, and when a symbol, by the way, Sip, when a symbol has been a good premium selling candidate in the past, it usually will be a good premium selling candidate in the future. And there are candidates that I've been selling premium against for the last 25 years. They'll take like 20% of their life and be honorary, right? They'll not be good candidates for selling premium, but the rest 80% of the time they're really good candidates. So even though Wendy's, we got our protective options kicked in and things like that, and the trade position ended about 5 or 6 months ago, we're back at it. I kept looking at it, and here's what I wanted to feature. Let's bring you to the present here. So Wendy's is giving me a hint that it has a new level of resistance around $20.50. And it's got a new level of support. Not new. It looks like it's been, determining this level of support for a while at $19. And so we just got a signal, and I'm going to switch my signaling software. So this is that free indicator that you talked about. And you can configure it. You can see I've got my free indicator installed on this chart 3 different times. And I basically have configured each one slightly differently depending on what the symbol is. So I'm going to turn off the one that we use in order to really analyze the S&P. And I'm going to turn on the one that I've used for getting trade signals off of Wendy's. And so you can see I got a trade signal on January 8th. Now my indicator gives end of day signals. I mean, you can configure it to do all sorts of things, but I use it for end of day signals. And then sure enough, on January 9th, we got some good follow through. So that would have been a good day for us to either buy some symbols, some Wendy's stock, or for us to buy a leveraged call option. We would want to far out in time. I'm talking January 2025, and we would want to go deep in the money. In fact, the one that I'm looking at is the Wendy's January 2025 $10 call. So that would be a good substitute option if you wanted to include a little bridge. And the good news is, and this is what I really like about our premium selling strategies, is you could totally miss a trade signal by a few days and still get in. You can see that price is still hovering around what our entry day would have been. So you can look for another opportunity to enter this. It's not like you have to be there in front of your computer right when you get the signal like other trading strategies. You can be kind of, sloppy and lazy. And so I like Wendy's for going long right now. And like you said, this is, you put this symbol into your portfolio, and as it goes up, you just take advantage of it going up. But when it takes a break, right, and starts to work its way back down a little bit, which it could do at $20.50, it could go higher. This is the first test of that level of resistance. So it could actually go higher. We won't know if this is a good level of resistance until we get a second test. So it may go higher, it may not. But if it decides to reverse, whether it be at $20 or $21 or even $21.50, we can sell premium and take a little bit of a paycheck off of it while we're waiting for it to resume the upward movement. So there's so much flexibility to take advantage of these little pullbacks. Right now is when I want to be either buying the stock or buying that substitute option.
All right, Wendy's. That's been on our watch list for quite some time,
and I think it's time to bring it back. Bring it back. Give me that square burger.
Yeah, and knowing the American consumer, I believe there's a strong demand here for this product. So, Wendy's will keep an eye on the watch list. Do you want to revisit Paramount real quick? Because I know that was our pick of the week last week. Did anything evolve from our analysis there?
Let's take a look. This is ticker PARA.
That's right.
So we were talking about shorting Paramount, right?
Mm-hmm.
And I'm glad it did, right? Either shorting Paramount or the other option, it would have been buying a deep in the money, far out in time put option. Both of those kind of act the same way. Money if the stock price goes down. So whether you short the stock or you buy that put option, you make money when the stock goes down. And look at what's happened in just the last few days. The stock has dropped another $1.50. And so this is just working for us. And what we're setting ourselves up for, SIP, we're making money right now. If you shorted Paramount, like we talked about, you're making money on this move down. But then if it pauses, just like we were talking about owning the stock, and every time it paused on its upward move, you could sell premium. What's nice about this other strategy, this is kind of a little secret that option traders know, is that you can also take advantage of that on the down move. So we shorted it, or we bought that deep in the money, far out in time put option that actually profits on the opposite movement of the stock. It profits when the stock goes down. If the stock takes a break going down, we can then sell put premium, right? It's hard sometimes for people to wrap their mind around it because people are so used to buying stock and letting it rise in price. And this whole model of seeing stocks go down in price kind of befuddles people. But sure enough, you can do this in reverse and make money on, and also make money on down move stocks that pause in their down move. And so Paramount's doing exactly like we said we did. And I hope some folks, paper trading log, if they're just new to premium selling and they're getting, their teeth sharpened, or if you took advantage of this with I'm really stoked for you.
Awesome. I love seeing that follow through from last week. So I also hope that people jumped on that because that was a great setup. All right, moving on to a few other names. This is our speed round. So throughout the week, some of our members, some of our viewers have thrown out some names to AJ, and in this part of the show, we'll go ahead and review a few of them. So the first one is Robert from Phoenix, Arizona, interested in, this is a new one for me, Core Mining, ticker symbol CDE. Are you familiar with this one?
And that the way that they spell core is, it means heart, right? COEUR. A mining company. And I like that there's a signal forming today. I see where you're going with this, Robert. So I don't know much about the company. I know that I'm looking at their earnings, and they're basically just a little bit shy of breaking even. Maybe, Sip, while I'm talking about the technicals, can you pull up a profile and maybe get an idea of what it is they're mining?
Yes, sir.
So, yeah. Let's look at the technicals while we're waiting for SIP to tell us about the company. Sure enough, yeah, I see that we have determined that there is a level of support. I love that it's, a penny stock, right? So it's affordable by folks that have small portfolios. Um, let's take a look at the option chain. Before I go any further, we have to make sure that this is optionable. It is. I'm particularly interested in the option that's 3 to 6 months out. This is the option that I would use as a protective hedge on any sort of option strategies I'd use, which means I need liquidity there. I need people buying, selling so that I can buy and sell very quickly and if to get it off my hands, make sure that there's a playing field. So let's take a look at the option that's maybe in the June time frame. So take a look. The strike prices are every 50 cents. That's fantastic, right? That gives us a lot of opportunities. And looking at the bid-ask spread of the calls and looking at the bid-ask spread of the puts, I can tell that there's people trading these things. So this gives me a lot of promise around this stock. And again, I mean, if you've got a small portfolio, this one might be right up your wheelhouse. So back to the technicals. Yeah, this dude seems to have established a level of support. This is the second test that we're getting. The signals are coming pretty strong using our fast MACD setup. So the fast MACD has a fast moving average of 6, a slow moving average of 19, and then the MACD average of 3. So if you're ever using the fast MACD, instead of the standard numbers of 12, 26, and 9, the fast MACD is a 6, 19, and 3. So keep that in mind because we like to trade often the fast MACD. The fast MACD will give us signals on something that oscillates monthly, right? So I love this signal that we're getting today. This would be an end of day signal. So don't act on it today, Robert. Instead, what we want to do is make sure that the signal still exists this evening after the market is open. After the market has closed. And then we'll look for follow through next Monday, Tuesday, Wednesday. So on the day of trading, just make sure that indeed it's going to continue to go up. And, you're thinking of buying the stock, right? Or you're thinking of buying a substitute. See if there is actually a substitute. The stock is so cheap, by the way, that maybe you just stick with buying the stock. But let me see if there is a substitute. So we want to go pretty far out in time. And I'm thinking January 2025. And we want to go deep in the money. Yeah, there's actually some interest pretty deep in the money. So you might go with this $1.50 call option out in January 2025. You'd be able to pick up basically shares of this substitute option for about half the price. So twice as much leverage as the stock itself. So that might be an opportunity. But if you want to play it super safe, you just buy shares of the stock itself. So I can see something there. Sip, what'd you find out about the company?
Well, they're old. They've been around since 1928, and the consensus is a U.S. based, well diversified, growing precious metals producer with 4 wholly owned operations. Gold, silver in Mexico, in Nevada, so in Alaska. So I would say they're one of those traditional gold miners. I'd maybe look into the numbers some more, but it is a cheap name, like you mentioned. So
and it's boring, right?
Yeah.
I mean, so the scoop is sell premium against it. So set up your initial covering position like we've been talking about, buying the stock or buying the back month call option, and then wait for it to do what it does next. If it gives us a solid number on this 3.6 for resistance, that's when you would sell your premium, take a little income off of this, buy a protective option, roll that start the cycle of creating income. If it by any chance shoots past 3.6, maybe going as high up as, 4 or higher, maybe instead of selling premium, you just take your directional profits and run. But yeah, I agree with Sip. Do a little bit more research on the company.
All right, thanks for that, Robert. Moving on to our second name, an industry that's been getting a lot of drama this past week. This is Lewis from Chapel Hill, North Carolina, interested in Spirit Airlines, ticker
Ah,
symbol SAVE. But have you been seeing the drama with Boeing and Alaskan Airlines with that window blowing out?
yeah, yeah, and it's neat because they seem to have like recovered every piece of this thing that just kind of fell from the sky into a neighborhood, except for they said they're missing 4 bolts. So they're, yeah, I have, and what I've, of course, being the investor that I am, and I try to separate myself from just the atrocity of what it would feel like to be on an airplane and see a window blow out, right? Or a door blow off. Is did Boeing's stock actually have any problems? And they had a little tip down, but a move from about 245 to 230, that's just a blip on the radar, isn't it? So I'm concerned about our aerospace industry, about Boeing's contribution to the world of airline stuff. They got to fix this, just like they have to mistake. But let's take a look at Spirit Airlines, because Spirit Airlines also is under a little bit of news headlines, isn't it? JetBlue has, you might remember, Sip, we talked about this almost a year ago about how JetBlue and Frontier were both, bidding on Spirit. And it almost made sense that Frontier would be the winner because Frontier has more of a business model. It would be easier to acquire Spirit and not change very much. But JetBlue won out with the whole bidding war and, is set to acquire Spirit. And it's been stuck in government red tape, right? Because of monopolies and trust busting, you have to get legal approval from the US government to do this acquisition. And it hasn't happened yet because it's still stuck in there. So Spirit still is its own company, waiting to get the approval that it's allowed hired by JetBlue. So for me, I'm not a fan, right? Because it's going to be a very speculative. We don't know what the government is going to say. So it's guessing. And AJ Brown, first of all, he thinks it's weird when people refer to themselves in the third person. But the other thing is AJ Brown does not like things that are guesses, right? I like things that are more predictable. So I would like to see this with a predictable price pattern, and I can't assume that. So with that said, it's up to you if you want to try to trade this thing for a speculative, gain or something like that. You might want to do some research to see what is JetBlue's offer. Like, is it a stock purchase? And if so, at what share price would be agreed to, or roughly? And again, it's very speculative because until you get the approval, that share price is still going to be controversial. They'll announce it. And so, if you want to buy some of this stock or buy some of the back month options, hoping that the deal goes through and that the stock price goes up, you might, jump on that board. It looks like investors are thinking it's going to be around $16 a share. So investors have a really good, you're not a lone wolf. There's a bazillion investors out there that do a ton of research. And so you can see it in their footprints. And they've been thinking that it's going to be $16. And I'm guessing if we go back and we look at this dip, this might be some sort of news headline that said, the Justice Department is researching this further to see if they want to okay it. And so investors were like, oh, and so they got rid of it. And then all of a sudden, maybe there was some headlines or some rumors that everything was going to be okay. And now it's back up at $16. These are not the trades I like to do. But man, if you play your numbers right, just make sure that when you invest with dollars you're owing, right? That's my advice for anybody, any strategy, because this totally could backfire.
Yeah, and this is coming from someone with 20 years looking at these markets and knowing to stay away from the drama, and there's definitely some drama taking place in Spirit. So thank you, Lewis. Moving on to our third and final name in the speed round. Carl from Little Rock, Arkansas is interested in your take on Wells Fargo, ticker symbol WFC. Banks are hot this week, or there's a lot of news around banks financials this week.
Yeah. Wells Fargo is one that we really have liked selling premium against, but it's not as it doesn't give us as many monthly signals. It hasn't been. It's been on a little bit of a mini uptrend, and I see here you see this reversal up here. Listen, if you're trading these bigger moves, right? You're going to, because these are on the 3-month scale versus on the monthly scale, you may consider, instead of using the fast MACD, going back to the standard MACD. So if you wanted to configure our custom indicator here that's free for download, if you just get yourself free access to our web portal, let's go ahead and turn off the one that's configured for fast MACD and turn on the one that's considered for standard MACD. And while I've got this setup up, I want to draw your attention to one more thing that our indicator allows you to do that other indicators do not. And that is, what price is the math behind the MACD calculating on? Right? If you go to just a standard MACD indicator that comes standard with charting packages, you'll see that there's no choice. It's all calculated on the closing price. But we've put it into our indicator that you can go ahead and choose all sorts of different options on what is the seed value for calculating that. And I've really done a lot of this on volume weighted average price. So this gives you a little bit of volume validation built into your signaling indicator. So this indicator, this free one that we put out there, is worth you installing if you've got access to. Just get access to the free details. Not only do we have this indicator, but we've got a whole bunch of white papers I've written and good stuff like that. But set it up as the numbers from the MACD. That's 12, 26, 9, all exponential moving averages. We'll put this over here. We'll say show the study. Click OK. Click apply. All right. So you'll notice now when I'm looking at Wells Fargo, Carl, that we've now got pretty good signals that match up with historical tops and bottoms. And I dig that. These other signals you could probably trade on, but some of them look like they're very good at canceling each other out. So I would use the standard MACD, and I do see that we got a standard MACD top signal just recently. Let's zoom in on that and see if that's tradable. We'll go to a 3-month chart so we can really stare at this. So here's our signal. I'm not sure if you got follow through on any of those days, but I can tell you for sure you're getting follow through today, it looks like. So yeah, I'm glad you brought this up. I bet you're noticing that there's follow through today. Shorting some Wells Fargo. So that means selling to open some shares of Wells Fargo, or alternatively, buying that substitute option. So what we would buy here is a deep in the money, far out in time put option. So we're thinking maybe January of 2025 and deep in the money. I can give you a strike price that I would probably be interested in. Let me look at the option chain. So let's come down here. You might even be able to get by with the September 2024. It looks like the September 2024, if you want an even cheaper price, is trading quite nicely. And I'd probably be interested maybe in this, either the 60 or the 57.50 strike price. The 60 has a lot more activity on it, so maybe you're interested in the 60. This thing is trading at roughly $12.70. That's in contrast to the stock that's trading at $47. So if you wanted to get a little bit of a deal, there's some leverage for you. Make sure you take into consideration what that leverage does for your risk profile. But yeah, I would do a September 24 $60 put and take advantage of what looks like is going to be a little bit of a sell-off here.
All right, Wells Fargo. I would also look into the. I think there's just a lot of bank earnings, bank info coming out this week that may be affecting the sector in general, which is something that we've discussed a few times on the show too, about how one bad report could bring a bunch of names down with it. So keep an eye on that. But there is a lot. It looks like there's a lot of room to the downside. And if anybody's watched that Wells Fargo documentary where they're just blatantly lying to people, maybe they haven't fixed their internal issues, and so that may be indicated in the stock price. But we're not here to discuss those things. We're just here to find opportunities and investments, and we got ourselves a decent setup here. So thank you for that, Carl. We appreciate it. That's our third and final name in the speed round. Looks like we didn't get any live questions. So AJ, moving on to next week, the end of January. What are we keeping an eye on? How are we positioning ourselves? Anything to look forward to next week?
I am really looking for some certainty to appear in the markets. I would love to be able to plan out my 2024 investing, and I'm not there yet with the markets. I brought back up the S&P chart. The S&P chart is just so uncertain about what it's going to do next, and it's getting into this like almost breakout. I hate to use those words, but it looks like it might be kind of a breakout. And we've been talking, I didn't really bring it up so much today, but we've been talking in past shows about that yield curve inversion. I just happen to have it on a speed, or, right here, looking at the short-term rates. When you have the 3-month that is offering people almost 5.4% interest, whereas the 10-year is only offering people 3.954% interest. It kind of, I'm still doing a lot of research about how this yield curve inversion usually plays out into a downturn, and then I did a little bit of research in history. I love history when it comes to the markets. The last time that the Fed was able to do a soft landing without putting the economy into a recession was in 1994. And this was under the watch of Alan Greenspan. And I know he's got a lot of, he had a good record. He was one of the longest running Fed presidents, and he had a good record until he did some dumb stuff. And it kind of led up to the 2008 recession. And now his name is in, you'll notice that Jerome Powell never mentions Alan Greenspan. He always mentions Paul Volcker as being, I was a student of Paul Volcker. I was a helper. He won't mention Alan Greenspan, but Alan Greenspan was the last Fed chairman who was able to do a soft landing. Every attempt since then has resulted in bringing the market and economy into a recession. And if you look at what Allen did in 1994, he took the financial markets by surprise, right? Nowadays, especially under Bernanke and Janet Yellen, and now under Jerome Powell, it's all about forward guidance, right? It's about transparency. It's about telling investors what the Fed is going to do next. And there's all this, it's creating this reactions in the market to whatever the Fed says, because supposedly the Fed is being more transparent. Well, in 1994, the Fed operated behind closed doors. They didn't have any press conferences. They didn't talk about anything. They did what was necessary to do to meet their dual mandate. And they did. And it kind of almost brought the financial markets to a break, right? And it was very much against what the president of the United States at that time, which was Bush #1, Herbert Walker Bush, wanted from the Fed, right? He wanted them to lower rates, and they raised rates, but it kept the market, it basically led us to a nice soft landing. Right? The big thing that Allen did in the later part of his tenure was get political. And since then, pretty much every Fed chairman since has been political, which they're not supposed to be political. And Jerome Powell, with his focus on this 2% number versus taking, into consideration different bubbles, like the bubble in the housing market, the bubble in the food markets, a lot of the numbers that the Fed is looking at, if you remember, it's minus food and minus energy. Well, in the mainstream economy, when you and I go to buy things every week, a big expense for us is putting gas in our cars and paying for the heating and electricity in our house, as well as what we eat, right? And those numbers are sometimes kind of sporadic, and as far as food, it's out of control. So there's a lot of hints, and I hate to be the doomsday ringer. There's a lot of hints that 2024 will have a recession. So I'm watching that carefully. I'm watching for, in the short term, the uncertainty to be quelled, SIP, but in the long term, I'm looking to see, will we have a soft landing, or will we put ourselves into a little bit of a recession?
Because if we go down, we'll be going down faster than we went up. And as premium sellers, we'll be in a good position to take advantage to that.
Yeah, it's all about what option strategies I need to use. And I would like to have the markets tell me. That's how I trade. I wait for the markets to tell me how to trade. And with the uncertain market that we're in right now, I have to start looking, and maybe next week we'll feature this. I have to start looking at strategies, because options can also be used to profit on uncertainty versus confidence. So I may be looking at some strategies next week, if this uncertainty continues, that'll take advantage and give me some end results on just the fact that the market is uncertain. So that's a little palate wetter for, make sure you guys tune in next week.
That's right. And with that, I do want to just give everyone an opportunity to be aware that AJ does offer one-on-one coaching. So he's got a great one-on-one coaching program. I went ahead and threw the link in the chat. If you want a little bit more hand-holding, a little bit more guidance, this is a great place to achieve that. Just scroll down here, book an appointment, and you'll get all your questions answered. The link to that is in the chat, so head on over there. If you've enjoyed the stream, the broadcast, hit that like, hit that follow, hit that subscribe, hit that retweet button. We truly do appreciate it. Heading into 2024, we've got some internal goals that we're trying to hit, but at the same time, we want to help you, the viewers, position yourselves for success. And so feel free to leave any questions in the comments, send us a DM, and someone will get back to you as soon as you can. Otherwise, stay warm, everyone, and we'll catch you guys next week. AJ, any final words?
See you on the flip side.
All right, guys, we'll catch you guys next week.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing tips, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.